PK Basu, very quickly to you, and I think this was one question to all three of you. One being, what would be the top picks? Do you look at any stocks that may offer any potential stability over the next few weeks in the long term as well? What would be your top picks, and what would be your one big advice to people who are watching you? PK Basu, let's start with you since you're already on the lookout for your portfolio.
So, I'd be looking at pharmaceuticals, for instance, Aurobindo Pharma or Dr. Reddy's. I'd be looking at things like Mahindra & Mahindra, the tractors, farm equipment are not subject. All automobiles except farm equipment are subject to tariffs in the US. The world's biggest tractor manufacturer is Mahindra, so they'll be a winner. So, so there are lots of opportunities like this. But I think, just addressing the point of whether China is about to take over the world, I think the Chinese, you should realize that
15 seconds, sir. I need to go to the rest.
China's foreign exchange reserves peaked 10 years ago in June 2014. China's foreign exchange reserves have declined by almost $1 trillion from June 2014 until now. So if China, every year China runs a trade surplus, but its people take their money out. And it's mainly the Communist Party members who take their money out. So those who know, the insiders, this is a classic form of insider trading. The insiders, Communist Party members, take money out in suitcases and buy real estate in the US, in Singapore, in Australia, in London, etc. So they are voting with their feet. They are taking their money out of this country. So do not believe this propaganda about China, becoming dominant, the new dominant economy. That's just 10% of the Chinese population is participating in this. More than half the population lives in rural areas, is still very poor, doesn't have access to cheap education, cheap healthcare, and therefore they all, I know, one of my cousins is married to a Chinese person.
I get the picture, whether it be insider training, whether it be tech, whether it be industries for that matter. I get the picture that you really are trying to portray, but there's also a flip side. Unfortunately, I go to Ambareesh whether he agrees with you on that, but there's also a flip side, and you just have seen how US and China have not only faced off over the markets or trade for that matter, have also faced off over deep tech for that matter. So there is the other aspect of what you are portraying. But Ambareesh Baliga, the same question to you. What's the top picks that you're looking at? Do you see any sector that could offer potential stability? PK Basu, I can still see you disagree with what I'm saying, but Ambareesh Baliga, over to you.
A number of sectors, but I'll just talk about 3 or 4 sectors. Consumption, which is basically manufacture local, buy local. I think this is a theme which should play out in the background of tariff wars. Specialty chemicals is the other one where China has been a major supplier. So with the disadvantage which China has now, I think India should come up there. Pharma, again, there are talks of tariffs, but it may not come after the sort of protests which we have seen in the last 2 days in US. And especially they would like to, hike the medical costs for a common American. And as far as IT is concerned, I think the fears have been overdone with the sort of fall which we have seen. So that becomes a decent buy at the current levels.
Oh, that's interesting. Why are you saying IT is overdone? Would you want to explain that? Because a lot of people are really talking about that.
IT has been affected because of the sentiment issue. The sentiment is linked to recession. There are no tariffs on IT services. And in IT, basically...
That's true, but recession is impending, isn't it? Long-term recession is likely to be a reality. So in that sense, it's unlikely that it's overdone.
Let me explain that to you. In IT, you have 2 types of orders which keep coming in. One is discretionary orders, and the other one is non-discretionary. The non-discretionary orders need to come in either ways because you need to keep your systems up and running. Okay. The discretionary orders are the ones which can reduce, but they will not become zero. And the way markets are portraying that IT is in for trouble, it may not be that bad as what the markets are portraying right now.
I think that's an interesting take. It'll be very interesting to pursue and see how this really unfolds, whether you hold true. If what you're saying holds true, I think a lot of people will heave a sigh of relief, whether it be in markets or real-time IT. Money